Hello everybody, Richard's back again. Hope everybody's doing good. Just wanted to make a little video about the economy, stocks and that sort of thing. And as far as stocks go, I think the most important thing, if you're wondering if it's a bottom, when there's going to be a bottom, is that there has never, remember that, never been a bottom to the stock market indexes in the middle of a Fed raising cycle. We are in the middle of a Fed raising cycle, and I wouldn't bet on the abnormal or the unusual. I would bet on things that have never happened. So that's something you can think about moving forward. Right now we're in a little bear market rally. That's what it is. Don't get caught up in, ooh, the bottom's in, there's nothing here, nothing to see here recession-wise. We are going into a recession. Things are slowing down, and they're going to slow down to job losses, foreclosures, and stress, which is one thing I want to talk about a little bit. We're going into an era of time where we've been through 2 years of stress with COVID. Now we're going to come into a lot of stress with inflation, with economic job losses, and all this maybe starting 8-9 months down the road. You're already starting to see mass shootings involving with children. You see a biker gang war on the highway yesterday. You're seeing all the signs of what happens when you have an umbrella of stress over the population. And it'll get worse. There'll be more drug addictions, more suicides, more murders, more alcoholism. The rate of consumption of alcohol will go up. There'll be accidents, bar fights, all these kind of negative things that happen in recessions. And that's part of the reason why in 99, 2009, and now you have a mass delusion. And as that mass delusion diminishes, the bear market rallies get smaller, and that's why you have lower highs. This will be essentially the first bear market rally. That'll be the marker for the high of the bear market rally. And the reason is, as you go on, they move the goalpost. It starts off with transitory inflation. Then, well, maybe it's a quarter point. Then maybe it's 50%. Then maybe it's 75. Well, it's not 75, right? But the goalpost is constantly moving. The bear market rallies start for absurd reasons, and people realize it. This one started because all of the major retailers were telling you that people have less money to spend and things are contracting. The bubble is contracting. Yet Macy's came out and they said we're doing really well. Well, that's because people have been at home for 2 years. Now they want to go out and impress their friends, and they're buying clothing. It's not a surprise. The same type of bear market rally will be caused by the travel industry. That doesn't mean people are flush. It doesn't mean a recession is not coming. It means if you sit at home for 2 years, you want to buy some nice clothes, a new bikini, and go to the beach or Las Vegas. That's what it means. Just because there's two things can be true at once. And that's something you really have to concentrate on in order to look at the big picture and get it accurately. Two things can be true: that you're going into a recession and things are getting worse, and people still have money to spend. People don't go broke overnight just because there's inflation and a recession. It's a slow process that goes down. The general stock market graph, if you look up close, has a first decline, bear market bounce, has a second large decline, and then it trails off until the end, right? So you have a couple of big dumps. We've gone through the first kind of big dump. The second one hasn't even come yet. So you want to be very careful in these bear market rallies. You want to take care of your psychology. You know, number one, you don't want to be a perpetrator of blowing your top. And that's what happens in high stress situations. I watched a video from Jordan Peterson about funerals, where there's always, you know, if they serve alcohol, there's always that one guy that gets drunk. There's always somebody who's spouting off at some relative, because the stress of the funeral makes people blow up. It's the same thing you have in recessions. And if somebody blows up at you, you want to try to be a little forgiving and say, okay, I know we're in a high stress situation and things are bad, and that's probably why it happened. He probably wouldn't have done it if his brain had been thinking normally. And the same thing is, you don't want to be that guy, and you want to be forgiving. You also want to be very careful in making decisions about everything, including your investments. because in high stress times, we don't make decisions as well as we do when we're really relaxed. So if you're thinking about buying something or selling something, or you're thinking of yelling at somebody, think twice. Don't think just twice. Think 3, 4, 5 times before you pull the trigger and make these decisions. So going forward, I'm telling you, things are going to get worse. I've called these things accurately my whole life, and we're not out of the woods just because Macy's sells some clothing. We're not out of the woods just because the inventories are getting lower and the supply chains bottlenecks are unbottlenecking. We are still in the middle of a Fed raising cycle. Remember that. There has never been a bottom for the stock market in the middle of a Fed raising cycle. So however happy you are at the top of this bear market rally, you need to remember it's going to get worse than it was at the bottom of the bear market rally, and maybe you want to trim some of those positions so you have cash for the ultimate bottom. Not just the bottom you didn't like before, but the bottom is 30, 40, 50% below that. Because that's what's coming. This is normal. Once again, you don't want to bet on the abnormal. 10-year bull markets followed by big declines are normal. That's how our economy, God knows why, but that's how it's been all the way since the creation of the first Federal Reserve, called the First Bank of the United States. Same people running it. The Bank of New York, started by Alexander Hamilton, are the same people running, not same people, but the same bank with the same philosophy. We build these huge bubbles. Don't buy because the bubble shrinks like this. It's going to shrink down to the size of a pea. There'll be people jumping out of tall buildings on Wall Street who've lost just like there always are. The markets will shut down because we have triggers that used to be this wide, now they're this wide. None of that stuff's happened yet. There's massive foreclosures, massive job losses, and that's normal. That's what we do. So we don't want to see it coming. We want to stay in this mass delusion because nobody wants to think about the stockbrokers jumping out of the building, your neighbor's family losing their home, that people losing their cars, their jobs, all, especially after 2 years of COVID. But you have to be realistic. You have to understand this is the system that we've created as human beings. Bubbles, collapses, bubbles, collapses. If you have a difficult time thinking about it psychologically, go talk to somebody. Go to a therapist. That's what they're there for. And I would imagine they're going to become really popular over the next 2 years. There's nothing wrong with that. Nothing embarrassing about talking to your friends about feeling bad over things like this. You want to really be careful over the next 18 months about what kind of decisions you make, how you treat others, how you treat yourself. Best things you can do financially, as far as I'm concerned, is build up all the cash you can. So in the real world example I used in the last bear market, Microsoft went from 80, people thought it was a great deal at 55, they thought it was a great deal at 40, they thought it was a great deal at 20, ultimately it went to 18. If you look at these situations, this is not a V recovery. Look at Warren Buffett's Berkshire Hathaway going back to 1999. According to people on YouTube or people saying these ridiculous comments, they make it seem like we'll be back to new all-time highs in 2 years. Warren Buffett, supposed to be the best investor in the world, look at Berkshire Hathaway stock. Went all the way through the 10-year bull market from 99 to 2009. The moment that bubble burst, Berkshire Hathaway stock was less than zero from 2009. That's a 10-year period of time making less than zero for Warren Buffett. So understand that these things take a long time once they're over, and if you're relying on getting back to zero as opposed to selling some now and having the cash to buy the $18 stock, it doesn't take a rocket scientist to figure out which way is going to be much better for you. I'm not going to go through a lot of that in this series. I just wanted to point out that the psychological aspect of what's coming is probably more important for most people than the financial aspect, because if your emotions aren't intact, you're not going to make good financial decisions anyway. So I hope everybody out there is having the best time they can have, and I hope things work out well for you. As you know me, I really recommend what people have been telling you for months, and it's absolutely true. Sell the rips, don't buy the dips. Wait until all the dust settles out after the Fed is done raising interest rates. Remember, there has never been a stock market bottom in the middle of a Fed raising cycle.